Discussion on basic accounting equation. Components.
Asset equals liability plus equity.
Liability.
What are accounts under liability? Current liability. Accounts payable. This account represents the reverse relationship of the accounts receivable. By accepting the goods or services, the buyer agrees to pay for them in the near future. Notes payable. It is like a note receivable, but in a reverse sense. In the case of a note payable, the business entity is the maker of the note. That is, the business entity is the party who promises to pay the other party a specified amount of money on a specified future date. Accrued liabilities. Amounts owed to others for unpaid expenses. Example, salaries payable, utilities payable, interest payable, and taxes payable. Unearned revenues. When the business entity receives payment before providing its customers with goods or services, the amounts received are recorded in the unearned revenue account liability method. When the goods or services are provided to the customer, the unearned revenue is reduced and income is recognized. Current portion of long-term debt. These are portions of mortgage notes, bonds, and other long-term indebtedness which are to be paid within 1 year from the balance sheet date.
Let's proceed to non-current liability.
Mortgage payable. This account records long-term debt of the business entity for which the business entity has pledged certain assets as security to the creditor. In the event that the debt payments are not made, the creditor can foreclose or cause the mortgaged asset to be sold to enable the entity to settle the claim. Bonds payable. Business organizations often obtain substantial sums of money from the lenders to finance the acquisition of equipment and other needed assets. They obtain these funds by issuing bonds. The bond is a contract between the issuer and the lender specifying the terms of repayment and the interest to be charged.
We are done with the liabilities account. Let's proceed to owner's equity account.
But let's discuss this on the next video. Bye-bye.